I'm not a massive fan of trying to time the market. I mean, it's great when things go your way, but when it's a long-term buy and hold, it's a really clear decision and you've worked out your criteria. You've got to be prepared to ride these waves. And when you stand back and look at the big picture decades later, it's more of a straight line than a jaggedy one. But short story though, to Pete's point, we've got a bit of a building crisis and materials are expensive. I think the secret is to not worry so much about the market conditions in the location that you're wanting to buy into, particularly if it's a home, but to consider your land to asset ratio. So what I mean by that is don't get something brand new. Make sure that the inherent value isn't all tied up in your dwelling. You want to make sure that the dwelling is the smaller portion of the value as opposed to the land. And that way you're insulating yourself somewhat from this issue that we're dealing with. Heightened building costs equals heightened dwelling costs. And ultimately, if you have a depreciating dwelling, then you could be losing money. I think making sure that you're buying for the long term, that's really critical because short-term ownership or tenure will always bite, particularly if you're dealing with a lower land to asset ratio.